world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Rishi Khosla. Rishi is co-founder and CEO of OakNorth, one of the world's best funded and fastest growing fintechs. We've had OakNorth on the podcast a few times before. In the past, I've generally referred to them as a challenger bank, which they were. But the company has developed beyond that description. From its savings and lending origins, OakNorth has evolved into a world-class technology platform with a banking license. Recently backed by investors, including SoftBank, to the tune of $440 million, the largest ever fintech investment in Europe. Prior to starting OakNorth, Rishi and his business partner, Joel Perlman, founded and sold Copalamba, an outsourced financial research company acquired by Moody's. It's energizing talking to great entrepreneurs like Rishi. I thoroughly enjoyed the conversation, and I hope you do too. Thank you very much for joining us today. Please welcome Rishi Khosla. Rishi Khosla, welcome to Rebank.
Thank you.
So we have connected with OakNorth a few times in the past, caught up with your co-founder, Joel Perlman, I think in episode 11 of Rebank, which would have made it, 2+ years ago now.
What episode are you on now?
I think this should be something around between 120 and 125.
Okay.
So way back. And in that episode, which I would highly encourage everyone to check out for context and insight, we talked about your guys' founding experience with your previous business, which was eventually sold to Moody's, and some of the inspiration for starting OakNorth, which was basically around difficulty securing funding for the previous business in the UK, the ease with which it was available in New York, and therefore the gap in the market for lending to small and medium-sized businesses in the UK, which you guys have, I think it's safe to say, delivered on extremely well in the, 3.5 years or so since launch?
Yep.
So won't run through all the accolades. I think first UK challenger bank to be profitable. You've never defaulted on a loan, according to recent press articles, and you're fresh off a $440 million raise led by SoftBank. That's a massive round. You guys have kind of gone from strength to strength. My first question to you would be, how in the context of the quickly evolving business, all the success you've had and this massive fundraising round, do you stay focused on key metrics and stay true to the, say, 3 to 5 year plan that you guys are working toward?
So look, I think for any business, it's critical to have a clear direction in terms of what you're operating for, what you're operating against, what are the metrics you care about. And the various frameworks out there. I mean, OKRs is a very popular framework. V2MOMS is another one. And we decided to implement V2MOMS within our business, which are fundamentally around having your key metrics and ensuring those key metrics are ones which are filtered through the organization, and everyone understands actually how their particular role or function leads into the overall corporate objectives. And actually having a framework like that in place is really important, especially as you're scaling at a clip, because you're continually bringing in new people, you're continually adding new functions and new areas. And to keep everyone aligned to actually what matters and why everyone's actually here and what the mission is so important. I would also say, intertwined in that, actually the values of an organization are absolutely critical in achieving those metrics, because metrics by themselves can get people a bit blindsided with regards to actually how they achieve metrics. So for us, balancing that with our core values are absolutely critical. And it's a combination of those two things, which I'd say sort of helps us keep our true north as we continue to scale.
So I want to get into more of that around the kind of scaling the culture, scaling talent, because I understand you guys have opened up a range of offices across different geographies over the past couple of years. But before we do that, maybe as much for context of listeners, and also because I think it's particularly relevant to what you guys are doing. There are two components, I think, of the business. One is a traditional balance sheet lender, so raising online deposits and making loans to small and medium-sized businesses. And the other is a technology platform, so an analytics engine, which you guys have developed in-house to help you streamline the credit underwriting and management process, and which you now sell on a white label basis to banks outside the UK. Tell me a bit about the way that those two parts of the business work together and how you see the kind of the dynamic of the business evolving going forward.
Sure. So look, from our perspective, we actually view there to be one part of the business, which is fundamentally about how we're solving the problem for growth companies who are in scale up mode around debt financing, right? So we really believe that debt financing today doesn't work for companies which are looking to borrow, say, circa $1 million to $20 to $30 million, pretty much anywhere in the world, because within that space, what ends up happening is that you're typically too small for large corporate institutional desks. In some developing markets, that 20, 30 million, maybe 5 or 10 million as the top. But you get to a point where you aren't big enough for the corporate institutional guys to take you seriously, but yet you're too big for the retail guys to service the needs that you actually have. And as we know, for smaller SME lending, where you're looking to borrow tens of thousands, 100, 200K, there's been a lot of innovation. There have been a lot of players who played in that space and are continuing to add technology in that space to solve that problem. Within the area of scale up is where we just feel there's a total void. And that void exists, like I said, across most major markets. So from our perspective, the whole platform we built and our whole approach with OakNorth Analytical Intelligence has been around how do we actually build a platform to solve that particular issue. Now, the fact that in the UK that we're using our own balance sheet to actually then prove through the model is a function of us actually wanting to approve the model ourselves. Both the opportunity exists as well as our platform actually does what it's what's been built for. And as we look at other markets, our approach is it makes sense for us to provide that platform to incumbents who are already within those markets for them to be able to use the platform to produce similar results to what we've done here in the UK. And in the US, we're doing a hybrid of that, because in the US, what we're doing is we're not only providing the platform, but we're also originating transactions and actually transacting them. So in theory, any capital provider can plug in and actually be the capital provider to those businesses through the platform.
Is it fair to say then that OakNorth is an international technology platform with a UK banking license, as opposed to a UK bank with an international technology platform?
I absolutely agree with the first characterization.
Do you think that was relevant to your pitch to SoftBank?
Who knows?
Presumably, they're not in the business of funding single market, UK startup banks, right? They're looking for something global.
I would imagine so, and we've always built global businesses, so our approach as well is to think globally.
Mm-hmm. So I want to get into the analytical intelligence platform a little bit. Mm-hmm. I understand that you're the guy that can take us past some of the buzzwords around AI and big data and talk about what exactly the platform does and the value that it adds. So one of the things you said there was, and that I think Joel has actually said, at least been quoted in the press as saying, is something around the ability to deliver to a medium-sized scale-up business, to use your terms, the sort of experience that a large company might traditionally get from a Wall Street lender. So what is it that the platform does that allows you to kind of create that experience?
So if you look at what actually happens, if you walk into a large investment bank and you're looking to borrow, call it $500 million, right, or even 100 million, the reality is that you'll get a team who'll sit around, start working on the business. You'll have 4 or 5 people working for probably 2, 3, 4 weeks, analyzing, modeling, running sensitivity analyses, etc., around your business to then create a structured loan package which actually meets both the requirements of the business, but also the requirements of potential lenders who'd run the same sensitivities around what happens in the business through cycle, what is sort of the idiosyncrasies of the specific business, where are your pressure points as you grow, et cetera, et cetera. And doing all that analysis is typically heavily manual, and therefore takes the time it does with the amount of resources that I just mentioned. Applying that to a business which is looking to borrow 5 million or 10 million or 15 million fundamentally is just uneconomical, right? Because the cost of the underwrite is so high in doing that, you just don't make that back in the fees, because your loan amount, 1.5% of arrangement fee against a 10 million loan is obviously very different to 1.5% against a 100 million loan, right? So therefore you don't get that service from a bank where you're looking to borrow that smaller amount of capital. So our whole platform is around solving that problem, which is about how can you take that institutional approach to lending and actually automate as much of it as you can. How can you get models learning so actually they understand that the first time you look at a microphone company, that the dynamics of the microphone company are based on, I don't know, obviously the construction costs, but massively to do with the branding and the distribution. So the second time, the third time, the fourth time, the fifth time you look at it, actually you've got some learning there, and you're reusing the data for benchmarking, etc. So you can understand what is the cost of manufacture, what is the cost of all the raw materials, how did the raw materials oscillate with any of those underlying resource costs, what is your cost of distribution, sales and marketing, what is your supply chain, what does that look like, etc. So fundamentally, when you've got, like I said, your fifth, sixth, seventh, eighth company in that specific space, your ability to actually churn out and conduct your analysis at a much faster pace is empowered by the underlying platform that you have. Now, obviously, the microphone company scenario was pretty niche. You take an example of a coffee shop, right? There are many coffee chains out there today, and understanding what the pre-opening costs look like, what the capex per site looks like, what the time to break even looks like, what the time to EBITDA maturity looks like, etc. And then understanding what's happened in the last business cycles to those types of businesses and running those sensitivities. That's all the type of stuff which gets embedded in the platform. And it's immensely complex, right? Because to get all of that working in a way where actually the machine's throwing out relevant insights to you takes a lot of training by the models, and that's ultimately driven by credit analysts working closely with data scientists.
So the data feeds that you guys are pulling out, are these like public sources? Are they traditional like business data feed type, I don't know, Reuters or Bloomberg type feeds? Like where
so the data feeds are in the thousands, right? So we'll take data from wherever we can get data, and ultimately we're very often not getting the whole picture from anywhere. And we're putting the data picture together almost like a jigsaw. So you're taking different nuggets of data from different places and putting that together.
I think one of the other pieces that has been mentioned recently is around simply time to loan decision and loan disbursement, I suppose.
Yep.
And I think I've actually heard you cite statistics as well to get that on the record for posterity. What are your guys' current understanding of the way that, say, a traditional bank might make a loan to an SME versus what you guys are able to deliver?
So look, what we hear from customers is the traditional market is sort of 4 to 6 months for a no, 6 to 9 months for a yes, right? As into cash. What we're aiming for, and we hit this on many deals, we don't hit this on all transactions, is 5 days to credit approval and another 10 to 15 days to cash.
Mm-hmm. And is it the fact that you're more, I don't know, that you're nimbler, smaller, leaner, you, I think, invite borrowers to present direct to your credit committee. Is that what allows you to make decisions more quickly, or is it the technology?
Well, fundamentally, if you just go back to what we just talked about with regard to the platform, you're replacing a process which typically took several people, several weeks to conduct, down to something which takes 1, 2, 3 days, right? So that delta is only driven by your ability to drive technology to the solution, to the problem. So it's definitely the technology, but then there's a lot of focus across the whole process about how do you actually transact as quickly as you can. Even, for example, with legal docs, right? We've created our whole precedent database, so we can get first draft of legal docs out very, very quickly, i.e. within hours after term sheet being agreed, rather than having then to wait for an external law firm to go and draft a first version, which will take 2 or 3 days. So we're adding technology and process efficiency at every step.
Of course, credit cycles are important to any lending business. You guys have had an excellent track record so far, and without, I think, discussing specifically, any impending change in credit conditions, we are, I think, as of the date of recording, 25th of February, a month and 4 days away from the current, Article 50 trigger, leave the EU here in the UK. What are your I don't know. Firstly, what, I guess, measures, perhaps, if any, are you guys taking as you think about originating loans, managing existing loans with a potential hard Brexit on the horizon? And I guess secondly, more broadly, how does Brexit influence your thinking longer term?
So look, I've obviously gone on record personally many a time saying that I voted Remain, and that's where my bias is. If you look at the potential outcomes, you've got an outcome which is a no deal Brexit where we crash out, and I think in that scenario there's going to be a lot of turmoil, right? And your biggest question there is what happens to supply chains, right? Do supply chains break down? And if supply chains break down meaningfully, right, then are you at a point where, you go to the real extreme where there's a still food supply coming in, et cetera, et cetera. And in that scenario, things look somewhat bleak. If you take, and I think, at least personally, I've got enough confidence in the process of government to ensure that doesn't happen, right? You look at any other scenario where there's an extension off, where there's some type of deal which is agreed, etc. In all those scenarios, I think what we as an institution have done is we've ensured that we've stress tested our own loan portfolio on the basis of the most extreme sort of downturn the economy's faced in the recent past, which obviously was clearly related to the global financial crisis, and ensured that actually our book can withstand that and continue performing, which as of today it absolutely can. I mean, I think in the worst case scenario where we run all of our stress scenarios, which we have to do as part of our regulatory process, our losses are contained to sort of like £2-3 million, right? Which, again, for the size of book, is not necessarily meaningful, and that's going through, because we can, a process of stress testing each individual loan rather than taking aggregates and sort of behavioral type calculations. So credit quality is absolutely critical for any lending business. Because of our approach to lending, where we do a lot of the stress testing when we go into a transaction, we structure a transaction specifically around the business, but also around the stress scenarios. We believe we built a portfolio which can withstand, and we also monitor our portfolio in a much more active and proactive manner than most commercial lenders, which enables us to actually foresee an issue coming through operating metrics before it hits real financial metrics. So that's our approach. And how has it changed what we're doing today? I mean, clearly we're spending, as we have actually for the last sort of 2 years now, sufficient time to ensure that we understand what scenarios we should be running and actually how extreme scenarios should we run before we actually go into any transaction.
Mm. You mentioned the word culture before in the context of the kind of, I suppose, scaling your organization. Yep. I understand you have something like half a dozen offices now around the world. I'd be really interested to hear how you, I suppose, scale not only culture but also talent, right? And hiring for quality so quickly.
So look, I think that's a real challenge in any business where you are scaling quickly in terms of hiring talent. I think it's the one area where, as you're scaling quickly, your bias or one's bias could easily be to let me hire the first person through the door because I need a resource. More often than not, unless that first person through the door is a great person, more often than not, that's the wrong decision. Because ultimately, when you're scaling fast, your ability to handhold an individual is much more limited because everyone's much more constrained on resources to be able to do that. So therefore, actually, continually hiring bar raisers are important. So people who continually increase the average, right, of the team, and ultimately, we have a lot of focus to make sure that you're continually hiring better than the existing person who's in a similar type role every time you hire, and therefore continually raising the bar of the overall organization. And even if that means that ultimately you have to wait for that person to be brought in, that's 9 times out of 10 the right decision rather than just filling a seat.
Yeah. Well, that must be one of the toughest challenges. You kind of spent the first 2/3 of the conversation talking about the efficient technology enhanced loan underwriting and management platform that you guys have built. Sourcing talent, embedding solid culture, getting people up to speed once they join is kind of a fundamentally human problem that wow, from a management standpoint, it must be taking up, I would imagine, a lot of you guys' time.
So first, I absolutely fully agree. I think in terms of culture, it's important that everyone's a culture carrier, right? And clearly that gets sort of propagated from senior management. But everyone in the organization needs to carry the culture and needs to make sure, therefore, that when a new person joins, that doesn't dilute the culture, but actually gets reinforced. And then, look, between my co-founder and myself, Joel spends a significant portion of his time just on hiring, right? Which allows me to spend a significant portion of my time on running the business, right, and growing the business. But that's how important it is. Where a very significant portion of my business partner's time is purely focused on recruiting.
Yeah. You, Rishi, strike me as something of a take no prisoners type of guy, and as someone who is not 100%, but 150% focused on what you're doing at any given time. And with OakNorth and the success you guys have had, it's perhaps no surprise. How do you avoid burnout? I mean, you've been at it for 4+ years, presumably, if you go back to the working through the banking license application phase and all the rest. Hard at it every day. How do you avoid burnout?
Hunger
over what time frame?
Decades.
What does success look like?
What does success look like?
What are you hungering for?
Oh wow, that moves every time you get closer to whatever that goal is. That goal moves way out. So I think the goal moves out exponentially versus where performance is. So for me, it's just hunger to build, to actually, I think the specific mission which we're on around improving debt finance for growth companies globally. Our estimate of the loan stock within sort of target companies for us is around 7 trillion globally, right? So if you look at where we are today, we haven't even started.
Excellent. Rishi Khosla, thank you very much for joining us today.
Thank you.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.